Alright, let's dive into something that's got the tech and finance worlds buzzing right now. Imagine this: Nvidia, the chipmaker giant, is teaming up with some of Wall Street's heaviest hitters: Apollo, Blackstone, BlackRock, Brookfield, Goldman Sachs, and KKR, to pour a whopping $500 billion into AI infrastructure. Yeah, you heard that right. $500 billion. But here's the thing, this isn't just about money. It's about reshaping the future of AI. And personally, I think this is one of the most significant moves we've seen in years. What makes this really interesting is the scale and the players involved. Nvidia's GPUs are already the backbone of AI, powering everything from ChatGPT to autonomous vehicles. But building the infrastructure to support this AI boom? That's a whole different ballgame. Data centers are power-hungry beasts, and securing long-term electricity capacity is no small feat, so Nvidia's strategy here is brilliant. They're not just selling chips. They're ensuring their biggest customers have the financial muscle to build the ecosystems that will keep them buying those chips for years to come. From my perspective, this move highlights a bigger trend: the privatization of AI infrastructure. Traditionally, governments or tech giants would foot the bill for such massive projects. But now, private capital is stepping in, and that's a game changer. These asset managers aren't just throwing money at the problem. They're structuring debt and equity deals, tapping into institutional and insurance capital. It's a level of financial sophistication that could accelerate AI adoption faster than anyone anticipated. One thing that immediately stands out is the timing. AI is at this inflection point where it's moving from hype to real-world applications. But the infrastructure isn't keeping up. Nvidia's move feels like a preemptive strike. They're not waiting for the market to catch up. They're creating the market. And that's what makes this so fascinating. It's not just about selling hardware. It's about controlling the ecosystem. What many people don't realize is how much this could reshape the competitive landscape. If Nvidia's customers, think cloud providers, automakers, and AI startups, can secure this kind of financing, they're essentially locking in their position as leaders in the AI race. Meanwhile, smaller players who can't access this capital might get left in the dust. This raises a deeper question. Is this democratizing AI? Or is it creating a new kind of monopoly? A detail I find fascinating is the involvement of firms like Blackstone and Apollo. These aren't just any asset managers. They're known for their aggressive, high-stakes deals. Their participation suggests they see AI infrastructure as a no-brainer investment. But it also implies they're betting on Nvidia's dominance. If you take a step back and think about it, this isn't just a financial deal. It's a vote of confidence in Nvidia's vision for the future of AI. What this really suggests is that we're entering a new era where tech and finance are merging in unprecedented ways. AI isn't just a sector anymore. It's becoming the backbone of the global economy. And Nvidia's move? It's a power play to ensure they're at the center of it all. Personally, I think this is just the beginning. As AI continues to evolve, we're going to see more of these megadeals, more consolidation, and more innovation. But for now, this $500 billion push is the story to watch. So here's my closing thought. What does this mean for the rest of us? If AI infrastructure becomes privatized, who gets to control it? And more importantly, who gets left behind? These are questions we need to start asking because the answers will shape the next decade of technology. Let me know what you think in the comments. Is this the future we want? Or is it a step too far? Let's keep the conversation going.